Hello, everybody. Welcome back to Breaking Bitcoin. This is your daily source for everything markets and personal finance. Hopefully, everyone's doing fantastic today, wherever you happen to be geographically, and however you happen to be tuning in to us today. Big apologies. Obviously, kind of got a frog in my voice today, and we're having a little bit of issues with the video today. So today's live stream, today's Breaking Bitcoin Market Update, going to be a little different. We're just going to be looking at the charts here. I will not be able to turn the camera on as we normally do. So we've got a lot to talk about today. Obviously, it is Tuesday, moving into the afternoon of today's trading session. I have gone ahead and been pretty busy today working on the new online trading academy. And actually, we've got a pretty big announcement here in just a few minutes. So don't go anywhere, guys. I got a lot to talk about. But I went ahead and published two tutorials and analyses on TradingView earlier today. So you guys can certainly go check those out. If you want to go over to tv.crackingcryptocurrency.com, I'll take you right to our profile on TradingView, and you can see our ideas. I just published a symmetrical triangle breakout tutorial and trade setup for Cardano USDT, and a rectangle bottoms tutorial and trade for Troy BTC. These are both pretty good write-ups. I reference quite a bit in these. I reference from Bulkalski's Encyclopedia of Chart Patterns, as well as my own experience trading these particular chart patterns. So, this kind of came up over the weekend, and we were talking about chart patterns in the group. And although chart patterns are not my favorite or preferred method of trading, they are still, or can be at least anyways, well, let's put it this way. I'll say it to you just the way that I told the premium members. If you're going to trade chart patterns, it behooves us to attempt to trade them as objectively and as rules-based as possible. And I think that looking to a reference like Bulkalski's Encyclopedia of Chart Patterns and forming a good, broad statistical range of data points for our chart patterns is a far superior way, rather than, because, let's be frank, if we don't talk about chart patterns, I see so many charts being published or referenced or posted in Discord or Telegram, where individuals see, it's apophenia. Apophenia is the tendency for individuals or for human beings to see patterns where there really isn't any pattern there to be seen. But the human mind is conditioned to search for patterns, to look for patterns, and to get that dopamine hit, if we feel like we successfully identified a pattern. So there are, many charts that I see posted that are referencing things like head and probably certainly the worst offender is head and shoulders or inverted head and shoulders. I swear, if I had a nickel for every 15-minute inverted head and shoulders chart for Bitcoin I've had sent to me, I'd have quite a few nickels. Anyway, so let's get cracking into today's show. We've got a lot I want to talk about. Today we're going to be talking about kind of this Chinese gold fraud, and why, when things like this happen, it just helps us see, it just, gives us a stronger fundamental grounding on why Bitcoin is a better alternative, why Bitcoin is a better form of money than even gold. We're also going to be talking a little bit about, the comp token. We're going to be talking about Binance buying Swipe. We're going to be talking about a recent Glassnode signal and kind of some publication going on about that. And the FCA finds 3.8% of the United Kingdom public owns crypto. So not a huge, massive number, but certainly a larger number than we had just a few years ago. So 3.8% of the United Kingdom population owns cryptocurrency. That's probably about as many individuals in the United Kingdom who like the Rolling Stones. So pretty good statistics. All right. If you guys have any questions, make sure to drop them in the live chat. Today's show is, of course, brought to you by the Cracking Cryptocurrency Premium Trading Group. If you guys are tired of wandering the markets alone and you guys would like to join our community of professional traders and begin building your own objective, data-driven strategy, if you're tired of watching poor discipline, poor maintenance, poor routine, bad trading habits sap away your progress, join our community and make the change at premium.crackingcryptocurrency.com. And while I've got you guys here, I'm going to go ahead and make a pretty big announcement. So bear with me here a little bit. So I'm pretty proud to announce the launch of our upgraded payment system. Now, I have been running a cryptocurrency-focused company and community for several years now. And running a cryptocurrency-based business in the United States does not make acquiring banking relationships an easy task. I'm not sure how many of you garden, but I've been a gardener since I was young. And that feeling when you're at the checkout counter in the grocery store and you look down and notice that there's dirt caked up underneath your fingernails. It's kind of a very similar feeling when you're, forced to walk into banks with your business analysis and your reports and basically all the information about what you do and request banking services, only to invariably and very many times end up hearing, well, unfortunately at this time and due to XYZ, or we're just not ready. Just a lot of, not a lot of ease, I guess, let's say, in that field. So long story short, we've been forced to utilize PayPal as a primary payment processor due to their, I think PayPal has a very firm, we don't care as long as both you and your customer are paying us a 4% spread. And as convenient as PayPal was and is, it doesn't really give us any flexibility with managing our members' subscriptions. And this is particularly bothersome in the case of recurring payments. And we have been searching for the right banking relations for the past several months. And we are pretty happy to announce that we're going to be utilizing Authorize.net as our new payment processor. This is going to allow us to make our members' subscription process much more convenient and carefree. And that leaves our members able to focus on what they do best, which is trade. And starting now, premium members can select to use Authorize.net as their payment option when they check out on the website. We will continue to accept and offer support for PayPal payments. However, we have created a new PayPal account to correspond with our new banking relations. This means that all current subscribers that do have recurring payments right now through PayPal will have to sign back up again on the website. We've canceled all of the recurring subscriptions that are currently going through the old PayPal. And all premium members who had recurring PayPal subscriptions will see their membership continue as normal until they reach their expiration date, at which point they will have to sign up on the website again to continue their subscription. And we're also taking this opportunity to launch our new pricing model. We've grown into a very large community over the last 2 years, and we've paid very close attention to the feedback that we get from our members. We always strive to provide the best educational material, trade setups, analysis, mentoring that we possibly can. And we understand that the current environment with COVID and everything that's going on is difficult for many individuals financially, and we want to do our best to support our members in this time. And as such, we are now offering access to our premium signal service, proprietary indicator suites, and our private Discord community at a discounted rate. I'm not actually sure. Yeah, so we got to refresh these, but so we're going to simplify. We are simplifying our subscription packages. Moving forward, our members will have the option of the following 3 subscription tiers rather than the 5 that we previously had. So we're going to continue with our premium basic package. That is, our entry-level subscription for an entry-level trader. They would receive access to our premium signal service, proprietary indicator suite, private Discord community, automated trading signals, cryptocurrency, traditional, and Forex market analysis, all of that at a cheaper price than we are currently offering. Monthly packages will run $110. And if you decide to purchase an annual subscription, you will actually only pay $99 a month. So actually pretty big drop on that as well. Premium Plus will be our second package. This is our most popular option currently now, and I assume moving forward. For the traders who want to do it correctly, you'll receive everything that Premium Basic subscribers receive, but you'll also receive access to our online trading academy, educational material and resources drive, community mentoring, where we dive into the nuances of what makes a trading strategy profitable. Now, moving forward, this means that only Premium Plus or above members will have access to our educational material, and that includes our Pathways to Profit strategy creation course, Risk Management 101 and 201, Strategy Building in Pine, Algorithmic Backtesting, and what we're going to be publishing here pretty soon is actually our new Algorithmic Strategy Creation process. So that package is the same price that all of our monthly subscribers are already currently paying. That means that current Premium Basic members will now receive access to more for the same price, and current Premium Plus or above members, Premium Plus or above members will receive the same material at at a lower price moving forward, particularly if they decide to purchase an annual subscription. And finally, we are going to keep the Premium Professional tier. That's the professional option for traders who really don't want to leave anything to chance. It's comprehensively, as I've laid out, our educational material, as reliably as we provide trading signals via the Premium Signal service and provide the best mentoring that we can. For some individuals, obviously, that's just not going to cut it. We launched aggressively with our one-on-one mentoring. And I've really enjoyed the time that I've spent over the last few months teaching and helping our community members build their strategies and punch past their weaknesses and shortcomings in the market. But I want to ensure that that mentoring time is productive and conducive to our students' progress toward building a good strategy. So we are now only going to offer one-on-one mentoring to premium professional subscribers to ensure that I have enough quality time to dedicate to each session. So new payment processor, cheaper subscription rates, more features. So far, it's a pretty good announcement, but wait, there is more. We are also introducing Coinbase Commerce onto our website that will act as our new cryptocurrency payment processor. So now that cryptocurrency payment process is going to be very streamlined and convenient. You can log into your Coinbase account to pay us if you like, or you can just spend to the wallet address that the widget will provide to you. Everything's handled by Coinbase for your convenience and security, and that allows us to accept more cryptos than just Bitcoin and Ether. So we can now accept Bitcoin Cash, Litecoin, DAI, USDC, and several other popular cryptocurrencies. Now, just to touch on this before we move forward, we are, of course, going to be allowing members of our community to opt in to their current subscription tiers at their current rates. So if individuals who are currently subscribed to the premium trading group want to stay at their current package at their current rate, that's absolutely fine. We will be honoring the terms of all subscriptions that have been purchased, whether that's in regards to educational material or really whether that's regards to personal mentoring. So, we'll still continue to do all the personal mentoring for the individuals that have those. What'll now be basically like legacy packages. So, and I just want to thank everybody because we've been working really hard on the website and all these upgrades over the last month or two. And I'm just really grateful to have the support and strength of this community in these times, which are pretty troubled overall for the rest of the world. And, just to let you guys know, we're doing everything we possibly can to improve our services and our standards. And of course, moving to a new, not a new system, it's going to look the same for you, but any transition, some individuals are going to experience difficulty. So if anybody out there has trouble signing up with the new system or, wants to maintain their current package, just don't hesitate to reach out, speak with a staff member, myself, reach out to support desk at support@crackingcryptocurrency.com. We're going to push forward. I'm really excited about 2020 moving forward. I want to push forward as a community, as a company, as individuals. My personal goal is and always has been to spread this message of financial freedom in a time where that message desperately needs to be heard. Cryptocurrency is, just as the internet was in the late 1980s, the next innovation, that next punctuated equilibrium, that moment in society, or that moment in time, that technological innovation that moves society so far along societal evolution that future innovations become almost unthinkable, right? And it's a message of personal responsibility, a message of personal discipline, and a message of cryptocurrency adoption. And I think that's a message that I can support. And it's good to know that there's a hill I'm willing to die on. We're all in this together, but the cool thing about life is that you get to choose if you want to be at the front of the change, avant-garde, front of the front, or if you want to be dragged along in the back by the winds of history. So, all right. So with that being said, guys, that's a lot. Thank you guys so much. So let's take a look at the main page. And I see I've got some questions in here. Let's see here. Peckham says he'd love to see a Mitch Ray and Justin face-off. Harmonic Genius versus Raw Data Cruncher. Can you look into this? I would be happy to do what would you call that? Like an open mic battle, yeah? Eli Back, thank you so much for the $5 tip, my friend. He says, bought X-Haven at 4,400 sats, have been holding since. First decentralized stablecoin seems like it may be picking up steam. Any bearishness in sight? Well, only because you think it's bullish. So let's go. I'm just teasing, man. Let's go take a look. XHV BTC. Well, I mean, you look at the weekly, and that's a pretty hard to say that is a bearish chart or any bearishness in sight. Let's see here. Let me go through the rest of the. Thank you guys. I appreciate the recipes here for remedies. Ivan on tech. Justin won't show video. COVID-20 crypto purchase start. GBU Wally, thank you so much, my friend. Yeah, I would never look. Yeah, the Pie Guy says he would never look for an inverted or regular head and shoulders on the 15-minute chart. You got to hit the 1 second chart with those. Everybody know that. And GBU Wally dropping the pareidolia. And I see we got a request for Origin Protocol. Let me see here. PayPal, or the Pi guy says, my 3-month subscription just hit like 2 weeks ago. I have to re-sign up at X. Yeah, so just whenever your next expiration period is, the next time your subscription expires, you'll have to sign up on the website with the new packages or opt to stay in your current package. Yep. So, Mr. Spooner. Yeah, you can opt, as I said, you can opt to stay on your current package with your current price. I feel like I'm working for a cell phone company. But yeah, so, whatever the current package that you currently have, you can opt to stay on that for as long as you like, or you can choose to opt to the new packages. Personally, the new packages are going to be cheaper and present a discount. But for example, in the case, you brought up a very good point. So for the case of a premium advanced member who is receiving mentorship, they would have to either choose to stay on their current package or transition to the new premium professional package. And like I said, if anybody has any like specific or individual questions about like your personal account or your what makes the most sense for you, just get a hold of us, guys. Email support. We've got the guys ready to go. Send a DM. All right, so let's look at XHV before we get into Bitcoin, because Eli Back was so generous. Because I went ahead and published quite a bit about chart patterns today. I think we'll just do things a little differently today, and I think we will. I think we'll kind of look at some of classical technical analysis. Of course, we'll bring the regular indicators in here, and we'll just kind of look at how I would do my best possible, do the best possible, I guess, to apply objectivity and rules to non-indicator data. All right, so support and resistance is a thing. Horizontal support and resistance, supply and demand, is a concept that exists in cryptocurrency. There are many reasons for this, but again, I think sometimes these reasons can wax even a little philosophical. But certainly there is demand in Bitcoin. There has been consistent demand. I mean, I hear people get far too technical with their definition of demand. When you hear, podcasts, and when you've had conversations with individuals that work or have worked at OTC desks for cryptocurrency, and, they tell you stories of, in the early days, individuals coming in to the OTC office with a suitcase full of cash saying that they want to buy Bitcoin anonymously, and that was not a rare occurrence. There is demand for Bitcoin. All right, so XHV did a little bit of, I don't really want to call this a rectangle bottom, but certainly did some consolidation, followed by what we might be able to interpret as a spring, forming its kind of lowest low here, kind of that moment of absolute despair, before climbing back up and trading back into its previous trading range, like holding the previous level of support. We can see previously XHV had really respected that 26,000 level of support, and then on that breakdown, this is where the boys are separated from the men. But we broke back up into the previous range and then just kind of consolidated there, and then we ended up finally breaking out of this entire range, which was quite rectangularly. But one thing I don't like about this, not only is this kind of a relatively low sat, and I don't actively trade XHV, but what I do not like about this particular chart is a lot of this white space. So these areas in between the kind of peaks of these price surges and the horizontal levels of resistance are what Thomas Bulkowski calls white space. And the more white space in a chart pattern, the less likely it is to do what you want it to do. Now, obviously, we could come in here and drop a horizontal line here, which kind of begins to make a little bit of sense. But All right, so we broke out of that area, and I bet you, bring up the indicator widget, and let's just look at volume. Yeah, we broke out on decent volume forming on the breakout of the trend. Now let's just kind of zoom out and see, as we approach that breakout point, did we see rising or falling volume? And kind of the easiest way to see that is to turn on the volume moving average. Yeah, I would say volume was relatively stagnant moving into the breakout. And then again, we can see the volume moving average go from moving down to moving up right around this area, as we do see volume come in. When you are in a consolidating period of the market, when price is range bound, if you track it long enough, you typically want to watch for volume to begin rising. That is a good sign that you are getting to a resolution period. But anyways, we do end up breaking out. There's no retest here. There's really no opportunity on the daily time frame to have grabbed XHV whatsoever. You really just needed to act on this strong candle body close on good volume. I would have been a little hesitant on this one, because this candle right here is not the definition of a strong candle body close. Very long wick, although the volume is decent, but again, price does just keep marching to the upside here. We get our kind of first absorption, buy side absorption here. So now we have our first order block. All right, area for the market to take care of. And we have just recently peaked out. So certainly just looking at this chart, this is a take profit area for me. I mean, we're coming off of 1, 2, 3, 4, 5, 6, up candles on the daily time frame. So almost a straight week of bullishness for XHV. Decent rising volume, but you have the volume spike here. The trend is proceeding on decent, consistent volume. I don't really see a blow off top, either with price or with volume. I think that this is likely to consolidate or pull back again, or continue. I don't have a strong bias toward either direction. As far as, does this strike me as an attractive entry zone? No, this strikes me as an attractive take profit zone. So what I would probably do in this situation is I would look to sell about half of my position if I had not already. I would set a trailing stop. I would set a trailing stop around 16,072 sats. And I would potentially look at the 14,000 to 12,000 area as kind of a wide range to revisit and see, just kind of what emerges from price when we get there. I really wouldn't want to do anything with XHV right now. There's no objective signal that screams out to me. So let's go to and let's see what the traditional system would say. Yep, and it did give us, let's look at how my PTP structure would have traded this. All right, so where's the actual crossover? Right there. All right, so that is when we get confirmation, and on that same candle we get volume confirmation as well. All right, so PTP could have gone long on this candle right here, at least my personal strategy, and would have caught this first wave, selling here on this exit signal of time transformation, and we get a continuation trade right here on the 26th, which is right here. So continuation here, and so I would be in this trade. We are getting purple dots of death, which means that time transformation is pushing into overbought territory. And this is bearish divergence, regular bearish divergence. We have formed a swing high. We are forming another swing high, not confirmed until we put in some down candles. But and we can see that time transformation made a high here and a lower high. So when price makes a higher high and your oscillator makes a lower high, that is regular bearish divergence. And in a bull market, regular bearish divergence leads to throwbacks, I say. Well, throwbacks is really the wrong term. Throwback is when a kind of a setup ends up breaking out in the direction that you wanted it to. but before it hits the take profit, it violently sells back down to your entry level, or even into loss, into territory of loss. Regular bearish divergence, particularly with time transformation, certainly has a good track record. We are overall, I think, in a bull market in cryptocurrency. That's going to reduce its effectiveness just a little bit, but still, I think that signal is not really telling us to short XHV. I'm not aware of any platform where we can, but certainly a good opportunity, kind of a good taking profit area. What I would be watching if you wanted a more objective signal is like wait for time transformation to cross under the signal line, and that is going to confirm a simple line cross under, which can be an exit signal. It's also going to confirm the regular bearish divergence. And like I said, if we wanted to, consider re-entry areas, I would be looking at the range of about 12,000 to 14,000 sats. Otherwise, let's see here. Back up these previous highs. Otherwise, if we want to get our moon boots on, logical areas to retest on the way back up are going to be kind of consolidation around 26, and we really get there. Now, that is not predictive. I'm not saying that I think that's going to happen. I'm just saying that should price go up, those would be logical take profit areas. All right, let's go to the daily. Look at Bitcoin as we normally do. All right, a couple interesting things that are emerging. Again, we had that objective Minx line crossover yesterday. So I know many individuals utilizing Minx as a reversal indicator or using its reversal reversal indicator trading signal, which is if the Minx line is oversold and crosses above the noise line or the signal line, that is a signal to go long. Conversely, if the Minx line is above the overbought threshold and crosses under the noise line or signal line, that is a sign to go short. So for me anyways, I don't trade like that. I don't trade reversals. What those are for me are exit signals. Those can be early exit signals, particularly if you're utilizing Minx line crosses or oversold or overbought line crosses. I mean, really the metric is up to your personal decision with how you would choose to implement these trading signals into your system. But whichever one you decide to utilize, you're just going to have to pick one. This is a problem that I have. It's certainly not that I don't enjoy the questions that I get, but I do notice a kind of an incoherence because I will often be asked from viewers, new viewers, consistent viewers, to give them my opinion of a particular indicator or trading signal. So, for example, anytime we're going to get a golden cross, or anytime we get a hash ribbon signal, or anytime we get some rare indicator that I didn't hear anybody talk about yesterday, last month, last year, but now all of a sudden it's all anybody talks about. And I just find it kind of funny and disingenuous because it's not one of those situations where, you wake up in the morning and you go on to Cointelegraph and the top headline that catches your eye is Bitcoin magical trading signal. We haven't seen this one since 2017. And you know what happened then. It's not really genuine because I don't recall. You can look back on things like massive bull runs or huge movements in the market and find some signal, some indicator, some piece of evidence, some level of analysis, and say, well, if somebody would have just looked at the 88.5 period exponential moving average, super smooth, run through the D trender, then the bull run would have been obvious to see. It doesn't work like that. There's no such thing as a magical indicator. Obviously what we do and the kind of core of what we do as far as building objective trading systems is figuring out how indicators complement each other, and they tend to complement each other very well, and kind of interesting ways that we can combine the strengths of one indicator with the inefficiencies of another indicator. So we're just trying to kind of like a good relationship, patch the holes of the other, and have our holes patched. So anyways, Mink's giving that crossover signal after dipping into oversold territory. Overall, this is still a pretty consolidating and boring chart. And yeah, it's kind of like what is that meme where, let's see here. Let me see if I can find it. Yeah, so trading Bitcoin right now. It really does feel like this sometimes. Oh, come on. Come on. You can make it. Come on. Fill that limit order. Yes. I'd never actually watched that all the way through. Okay. So we are certainly consolidating. One thing that I wanted to kind of point out here, we'll do it right here after we, let's replace IOST. You know what? Let's not. I like IOST just where it is. Yeah, you can just see this this trend of decreasing volume. Honestly, I haven't really felt like this subjectively looking at the market since we were consolidating moving into the fall of 2018. And what happened then? Death and destruction. So certainly on edge, I think. Not really on edge because I'm trading different markets, so my profitability is not really as tied. I think that individuals, and I've kind of been pretty consistent about this, individuals put too much of their trading capital into Bitcoin. I have a lot of my personal wealth invested in Bitcoin, and that doesn't bother me because I know that money is in for the long run. I believe in Bitcoin. I believe in what we're trying to do. I believe that this is the most productive way to bring about the change in society or to institute the type of economic opportunities that I've always wanted for myself and for other individuals. And as I said, kind of at the beginning of the show, that's the hill that I'm willing to die on. It's pretty cool when you get to a point in your life where you know exactly. And I guess the only way I can say it is, where you're not really afraid of what's going to happen in the future, even if it's the worst case scenario, because there's only so much they can do to us. They can only take price so low. But yeah, declining volume is almost always bearish. Okay, declining volume is almost always bearish. But then again, as you can see, we swing toward the lower area of this range, and anybody has to ask themselves, like, oh man, every time I thought price was going to break down and I put on a short at the lows, price pops back up, punches me in the face, hits my stop loss, swings back down. So I certainly do want to caution people, as I generally do. We do not make a habit of longing resistance, and we do not make a habit of shorting support. And sometimes the best answer, honestly, lately, sometimes the best answer that you can do is you open up your chart, you look, you do not spot an opportunity that is in your wheelhouse, and you move on to identify something else that is, right? So for example, this morning I spent some time charting Cardano, Kyber Network, IOST, and Troy, identifying some trade setups and opportunities. Entered into some of those trades myself. All right, so let's talk about what we need to see and what I kind of expect moving forward. So we are in a bearish posture because the daily closing price of Bitcoin is below the baseline. In this instance, the Hall Moving Average 60. That is coming in at 94.5687 on the Bitstamp chart. Make sure to adjust if you are utilizing a different exchange for your primary kind of charting chart. The breaking Bitcoin initiator is sitting at 95.25. So if we were to see at this point a daily close above the BB initiator, which we haven't seen since we broke bear on the 11th of June. So the majority of this month, we've been bearish, even though for the, I would say the first week and a half of June, we were bearish also, but we were above the BB initiator, but below the baseline. So very kind of interesting area that we're in here. We do have receding delta from Wadatar explosion. As I said yesterday, this is the area where I would want to be exiting shorts that might have been entered into. We see the sell signal from Minx on this candle. We also see the rising explosion level from Wadatar explosion and the bright red candle with parallax confirmation below the baseline and inside the qualifying zone. That's a lot of confirmation, but it would have netted you about a 4% movement down to that lower wick. And certainly with volatility the way it is, let's just take a gander. Quadrigo, and I think we looked at this yesterday. Yeah, so here's Quadrigo. There would have been our take profit target, and man, managed to grab a winning trade in chop. So I would like to see price above 95.25. That is going to be the first chink in the armor that I need to see to be looking for the continuation to the upside. So far, not getting that, and I also need Minx is not generating, an actionable signal for me at this point in time. So utilizing the breaking Bitcoin strategy, Bitcoin is not telling me to do anything. Now, if I go look at the Donchian system for Bitcoin, this one is pretty interesting. We do have the true strength index acting as a confirmer, clearly crossed under and signaling for short trades. Time transformation, which is the initiator in this strategy, signaling for no such thing, right? Giving us quite a bit of kind of consolidation and chop. And kind of the unsung hero of this strategy is, of course, dynamic money flow, which is a smoothed version of the money flow index, the MFI. And I quite like it. And it is not signaling for shorts on Bitcoin. Now, that does not mean necessarily that price is going to go up. I want to draw your guys' attention to the last big sell-off that we had in the market. Dynamic money flow didn't break bear until the 26th of, I'm sorry. So it gave the first bearish signal on the 1st of March and then whipsawed for about a week until it very confidently on the 8th of March signaled bearish and stayed bearish. So that means if we review this area of the market, we did not sell the top, the 8th of March as actually here. So this is quite a bit, like imagine, let's do bar replay. Okay, because we can see, we obviously were able to see what happens next in the market. But when we actually go to March 8th and kind of look and put yourself in the shoes of how you would have been feeling and the decisions that you would have made. So let's go and take a look at what March 8th looked like. Would have been the next candle. Bam, look at that big downside candle right there. And that is the candle where we get the signal to short. You can see on that candle close, time transformation crosses under, true strength index is crossed down, dynamic money flow goes negative, and of course we're below the baseline. Now, we are not in the qualifying zone, right? We're not in the qualifying zone. So for those of you implementing that in your strategies, this would have been a missed trade. However, I want to point out that, look how far price has retreated from the local top. This is going to be about 20%, and at the time of that candle close, about 23% from the local swing high. And we play the tape forward. That was the trading signal. Now, granted, we had the March meltdown at that point in time. So again, people could say like, well, it's not fair to compare those areas of the market. That'll never happen again. Listen, don't ever say that, bud. I have seen Bitcoin sell off so hard, so fast, and pump so hard, so fast that, so let's go look at this area of the market where dynamic money flow was signaling short. So we can see that we're relatively bullish, and then we get our first bearish signal on the 24th of September, which is right here on this candle. So again, kind of the same thing, pretty steep, pretty volatile candles to the downside. That alone is a 12% candle right there. And although, shorting certainly is the move here, there is downside. There's 10% there. Price throws back a little bit to retest the baseline, and from there drops another 15%. So certainly profitable opportunities in there. And let's see here. And we have this Jericho candle pump. And let's actually see how this thing would have done, particularly. So we would have probably got, so we would have gone short here. let's see here, 1, 2, maybe not. It's the 24th. 1, 2, 3, 4, 5. Yeah, we would not have taken that. Not in any way, shape, or form. We would have taken this one. Yep, so this is a, oh, I'm sorry. This right here is the signal, and I don't think we get that take profit. I think that is a losing or break-even trade right there. But we take this trade, and we do capture quite a decent profit there. And then when we get that Jericho candle, yeah, just as I think with most systems, we end up having break-even. We enter here, and we exit somewhere right along here. And then dynamic money flow slips back into being negative here and allows us to capture all of this. So the reason I want to highlight that is not because, you know, DMF being in the green, indicating that price is more than likely to move up than down. It's really to indicate that it signals when the trend is really moving into the bearish zone. And you're able to catch, as I said, kind of the last half of the entire movement. It'd be a little savvy, but there's a lot of, particularly, well, anyways, with Bitcoin, when looking for short signals, longing Bitcoin has always been, in my experience anyways, easier and more profitable than shorting Bitcoin. It seems, you know, Bitcoin really likes to play fast and loose with kind of the formation and the way that it, just the way that it develops on the chart when we kind of have these areas. Now, I went ahead and I've talked about quite a bit today. Let's get back into Bitcoin over here. Let's look at the 4-hour time frame. Nothing really significant over here since bottom feeder fired on the 27th. We covered that. Let's take our Cybot and everything else off. You know, kind of keeping with the theme of, I guess, chart patterns and looking at horizontal levels of support and resistance. The only kind of significant thing I see here is, I mean, this is a level, certainly. You know, we can see it acting as support right now. It has previously acted as resistance. It has previously acted as order blocks. So that's about that $9,000 level, which makes a lot of sense. That's obviously a bit of a psychological level there too. You know, I talked about this yesterday. I've had it pointed out to me that this might be an inverted head and shoulders. I do not think this is an inverted head and shoulders in any way, shape, or form. But just assuming that the Bitcoin bulls are looking at this right now and they're like, nope, that's an inverted head and shoulders to the moon. Let's go ahead and measure our neckline here. About 5.51%. I'll just take that up. Yeah, something like that. I'll be a little conservative there. Yep, so that seems about right. So if we were just going for this kind of breakout trade, we would be wanting to get back above and the previous distribution area right here. We can see where this level is, a buying zone, and then it's bid up. We have some sideways distribution, violent sell-off, and that level is overcome by the sellers. Kind of very interesting area of the chart right here. Look at this. It's pretty cool to see. Where, as I said, we're kind of coming into that area, that high volume node area. I bet if we turn on VPSV, we see some interesting things. But high volume node area right here, high volume node, and price breaks through that pretty quickly and then backpedals and retests that same level as rejection. And upon that, we sell off. So it seems like that's what we're trying to do. I do see some signs of absorption for sell side flow. You can see that from the wicks to the downside. I kind of like to see that. And let's go look at the 45-minute chart and see what we can glean from sentiment, which is backwardation on price. So what is likely to happen? I'm not sure. I'm certainly not going to form a strong directional bias here. The reason why is because price is consolidating basically at the bottom of its range, and it can certainly drop out. We can certainly lose 9,000, and we can go moving pretty quickly down. As I said, coming off of our third weekly doji, we've got a brand new fresh weekly right here. We are just drifting down after testing the top of our high volume node red box territory. Kind of meandering lazily down to the bottom, right around, 8,000, 8,200. Makes a whole lot of sense at this point in time. That seems to be where price is walking. And again, as I said, declining volume, this typically does lead to a more pronounced pullback, which, as I am short and midterm bearish and long-term bullish, particularly. So when I say midterm, let me be very specific about what I mean. I think as long as, well, it's pretty simple, guys. As long as price isn't pumping, price is going to likely continue to slide down or move sideways. So I think it was Alex and Jason yesterday who, said, well, we heard you guys. We know what the people want. And, 4 more months of ranging. Yay. Unfortunately, the longer we do that, the longer it becomes likely that we slide. It's very, very easy to get a pretty decent pullback. And I think people are, I think I already commented on that. The fact that we've got a lot going on. We have exchange reserve at historical lows, at the lowest that they've been certainly in the last 12 years. We have an absolute increase in the amount of individuals hodling. We have an increase in the amount of wallets that have 0.01 BTC on them, that have 0.1 Bitcoin in them. So certainly a lot of bullish fundamentals that really basically just say that the hodlers are continuing to hodl, and they're hodling harder than they've ever hodled before. Oh yeah. In the land of classical TA, this agrees. So again, this is just very, very simple right here. We've got our long-term trend line from the top of the 2017 bull run, marks the top of the 2019 bull run, and so far is marking the top of the 2020 bull run. As I said, kind of the last thing here is I was expecting to get resolution of this current area of the market in this 10-day window. That has not occurred yet, but maybe if it occurs in the next 2 days, you guys will cut me some slack and say, hey, that was a pretty good call. RSI remains bearish in bearish control zone below 50 at 45.04. And just like Bitcoin's price, kind of slow walking it back down to this level of liquidity that I've outlined right around 8,600, where we see the last kind of significant buy side flow step in, right? There be whales in these waters. All right, so because price is in backwardation, I would not aggressively short price here. Let's go to the 5-minute chart. Yeah, so we can see kind of the zenith here. We see backwardation spike dramatically here at the absolute lows, and price has bid back up into the auction area of the market, so where buyers and sellers typically agree. So this is going to be the median, and we see backwardation begin to spike again. So I think that individuals, it seems pretty clear that individuals are trying to take advantage of this kind of retreat to a higher price to place on their shorts aggressively via market orders. And I don't think that that's the right decision. So I think that, just as I've been pretty consistent on, I think that it makes more sense for price to move up from here in the short term, so intraday, than it does in the long, than it does to go down. Seems like a poor area too short. Looking at the CME chart, this is fairly good. The CME chart's been pretty gangster, I think is the word that I'm looking for, with regards to determining the direction of the trend, highlighting gaps, and then obviously kind of the mainstay here is the baseline applied to the CME charts. So we are in a bearish trend, although it's really a consolidatory trend, but certainly not bullish. So we've crossed the threshold to be closing and trading underneath the whole moving average 60 on the daily time frame. CME charts are bearish until we close above 97.50, and that would also be the area to be setting your shorts if you wanted to enter on a limit sell entry on kind of a reversion to the mean strategy, or the simple philosophy that when price is in a bearish trend, short corrections. And when price is in a bullish trend, buy dips. All right, so let's go to what caught my eye today. And we're going to start off with Cardano. Okay, so I published this on TradingView earlier this morning. And I wanted to kind of break this down on the stream. So before I get into this, I just wanted to kind of review the chat. June 12th, 1776 says, I appreciate the time and effort it takes for the amalgamation of your technical confluences within your tactical strategies. That sounds like a thumbs up. Also, but hey man, that's pretty cool. Thank you so much. Sometimes I do wax a little loquaciously and a little poetically. Jose Caneta says, I need an office. Maybe I can focus more. Yeah, I will say this. You know, being an individual that earns his active income from trading at home, an office is absolutely essential. This is very, very common for young men who are particularly intelligent. So I find myself befriending and working alongside a lot of programmers and developers and individuals who work from home, whether they, you know, do marketing or sales or, again, coding generally tends to be the biggest part of it. And because you're not going through that routine that conditions your brain and conditions your habits, it's really easy to adopt a bad habit set if you are left in control, right? Most people think that if they were given the reins of power, they'd do an amazing job. And nothing could be farther from the truth. 99% of individuals out there, if they were given the reins of power, they would biff it harder than they could possibly imagine. Power corrupts, and management is not easy. This is why you have individuals like Jeff Bezos. This is why you have just, you know, highly competent, highly workaholic individuals that absolutely dominate their professions. Because I don't think it's that they're more smarter, or that they're more intelligent, or just have access to more resources. Generally, it's a matter of productivity and focus and habits. Building healthy habits and staying in an environment and creating an environment that is conducive to your mental health, your emotional health, and your psychological well-being is absolutely essential. So if you think you're going to work from home and you are laying on the bed that you sleep in your boxer shorts, you know, with YouTube open up on one screen and you're kind of looking at some charts on the other, you are highly unlikely to experience success. So, you know, I highly recommend you know, there's all kinds of things that I do to improve my productivity. So, for example, just a big one is go to bed early, wake up early. I typically get up anywhere between 5 and 6 o'clock in the morning. I exercise, fasted. I used to exercise in the evenings. You know, that used to be my kind of old school routine. I would, have a decent day. I would work out extremely hard into the evenings. I'd eat a huge meal, and then I'd go for a walk. I used to love doing that. Now I really enjoy exercising in the mornings on a fasted stomach. It just makes my body feel good. Makes the whole day convenient. So, and then yeah, like, you know, take your shower in the morning, dress professionally. Even if you're working from home, I work from my home office, but I dress like I'm walking into the office every day. So, you know, just little things that improve your mental well-being, things that you might not even notice, and that overall produce your competence and just improve the quality of your life and improve your productivity. Jose Caneta says, Justin, how much for a BB indicator? I will sell you the BB indicator for 2 joules and 6 Swissborg. Just teasing that. It's just, you know, I apologize, guys. You know, we've talked about this a little bit today as well, or not today, but obviously in the past. It's just not ready for me to publish yet. Has bar replay always worked with indicators? That's always made me remove them, Robert asks. Yes, it's always worked. It's one of the best ways to test indicators. Thank you, Paul Carpenter. Highly appreciate that. All right, so let's get into this. So this is Cardano USDT on the daily chart. And there's quite a bit here, but this is a symmetrical triangle that is forming here on Cardano. This is a pretty textbook example with very little white space. So let's break let's break this all down. So symmetrical triangles are a chart pattern, and they can be identified when price forms lower highs and higher lows, and price action occurs between two sloping trend lines that you can plot out. Those are the blue lines on the chart right here and right here, one acting as support, one acting as resistance, and eventually those lines intersect. And at the point at which they intersect is known as the apex of the triangle. Now, symmetrical triangles, all triangles really, but symmetrical triangles a little bit more so, typically break out or resolve when they reach about 75% of the way through the formation, right? So it's actually 73% if you run the numbers, or at least those are the numbers that Thomas Polkowski published in his book Encyclopedia of Chart Patterns. However, I digress. Now, typical chart pattern rules apply here. You would like to see multiple tests of the upper and lower boundaries of resistance and support, and also little white space, right? So I talked about white space before. I kind of wanted to explain what I meant by white space. So let's talk about white space. Let's say, we've got a chart pattern that somebody is sending us. This is Bob. He's sending us a chart pattern. And he thinks that he is seeing, let's say, like a measured move down, right? Measured move down is going to look a little bit like this. I should have changed the colors, but okay. All right, so just for the sake of argument, I think I can actually do this with a ghost feed. There we go. Ah, shoot. Come on now. Appreciate you guys being with me here for this struggle. I don't know how to turn this thing off, man. All right, so that wasn't super successful. Anyways, white space. Let's say we have a chart pattern, or price is doing something like this. It's moving up, it's moving down, it's moving up, it's moving down, horizontal support and resistance. And we feel like we can trade that some way or fashion. Okay, great. Now, white space is going to be the areas inside the chart pattern where price is not. So again, the white space. So let's look at IOST here. We could say something like, well, IOST formed a ascending triangle between March and May of 2020. We can see it progressed with a series of higher lows until we finally broke above resistance with a consistent horizontal level of resistance and a rising sloping angle of support until they actually met. And as we can see, if we would continue to plot this into the future, those would meet at an apex. And interestingly enough, date range, if we kind of measure from the beginning, the measurement to the apex would be 525 bars. And the measurement to the breakout was actually, let's say right here, 430 bars. And 430 divided by 525 is 81. So 81%, which last time I checked is pretty close to 75%. So again, another kind of good example of a triangle resolving as it nears the apex, when it gets to about 75% of the way through the apex. So we can certainly say here that price, our IOST USDT formed an ascending triangle, kind of a textbook example, honestly, and broke out. This is not really an ascending triangle. This is more of a kind of a sloping bottom, personally, in my opinion, if I want to consult the Encyclopedia of Chart Patterns. Because I generally assume for ascending triangles, for example, that they are going to happen in an uptrend. Ascending triangles are identified by they are preceded by an uptrend in price or upwards movements in price, and ascending triangles are not preceded by downwards movement in price. So that is a particular bottoming pattern and not really an ascending triangle, which is a continuation pattern of an already existing and emerging uptrend. So that's a pretty good example. As we can see, the support and resistance is tested fairly frequently, but let me point out the white space on this chart pattern. So as we can see, price does not make it quite to resistance right here before pulling back, and we can see it doesn't quite make it to support. That's called white space. And on this next upthrust, price is pretty far away from resistance. Now, on these sell-offs, we do touch support here and here. We don't touch resistance here. We do touch resistance here, so that's good. Come back down to support here. Of course, we grind out support here, and we break out here. So these areas were pretty good. Let's see here. So these are good tests. Yep, right there, and right there, and right there, and obviously at the beginning. But this area, 1, 2, 3, 4 areas of white space. And the more white space in a chart pattern, the less likely it is to work out the way that you think it will. Now, there's a lot of reasons, particularly in cryptocurrency where we have less volatility, why something like white space might occur. For example, by the time we already form we had already formed this kind of initial upswing, you can see the long wicks, right, which indicate heavy market sells. Or, again, lots of coins changing hands. Absorption. Price was trying to move up, and it ran into a wall, and price began moving down. So this is probably a little bit of front running, obviously, because now you have individuals who are holding large bags of IOST, positioning at this price and attempting to distribute anytime price gets to around 35.82, 0035.82. Until eventually somebody snorted and we were off. So let's go back to symmetrical triangles here. So it's a little bit of an explanation of white space. So the more white space you see in a pattern, the less likely it is to perform well. All right. So always be kind of wary of that, on the watch for that. A lot of people just see the basic bare bones of a chart pattern and they will post it. And I often think that people are not correctly identifying chart patterns. All right, so this is ADA USDT. This is what's currently happening right now. I believe that we have had a symmetrical triangle breakout here on Cardano USDT, which would be a bullish signal. Now, this pattern is about 30 days into forming. And if we measure, this is the breakout occurring right now, 30 bars in from the start of the symmetrical triangle. And I measured from the beginning, same place I measured to the breakout, to the apex, and that's 40. So 30 bars out of 40 is 75%. So again, holding to that rule pretty well. Now I have here that these chart patterns hit their targets 69.5% of the time in bull markets. But let me actually, I have this is Bulkowski's Encyclopedia of Chart Patterns. All right, so I apologize. So performance rank is 16 out of 23, which is where I actually got that. Percentage meeting price target is 66%, which means it breaks symmetrical triangles, break to the upside based on Thomas Bulkowski's research and backtesting, 66% of the time in a bull market, and they break to the upside in a bear market 57% of the time. So I think that we are in a bull market in cryptocurrency, and they break to the downside about 48% in a bull market and 42% in a bear market. So that number is actually 66%. All right, so as I said, symmetrical triangle is characterized by higher lows, or excuse me, lower highs and higher lows. And price action is occurring between two sloping trend lines that will eventually intersect at an apex. Typically, we're going to see declining volume moving into the formation of the symmetrical triangle, and then we wait until price breaks to the upside. Now, we're going to be talking about measured movements here, and two ways that we can measure our take profit level when we correctly identify something like a symmetrical triangle. So method one that Bulkowski teaches is pretty straightforward and simple. You just identify the highest high in the formation, so not like the last high, the highest high in the symmetrical triangle, and you calculate the difference between that price and the lowest low in the price. So you just take the highest high minus the lowest low, and you get for Cardano anyways, 0.2109, right? So that's the kind of the measured movement. That's the entire distance. That is the range of the chart pattern. And so we just apply that to the closing price of the breakout candle, right? Currently, price is trading at about 0.08270. I have stuck some limit bids in on ADA USDT to actually capitalize on this. And this would be, so obviously my sentiment here is bullish and I'm looking to take price to the upside. Now, I had done something back when I used to trade more chart patterns. I had used this. Right. So about a 1% movement. This is not exactly, I didn't actually use the trend-based fib extension. I think I just measured from this low to this high, I believe, and then added it on to breakout price. But certainly another way to do it, you measure from, low to high with the trend-based fib extension and then go down to the low. You're just looking for a one-to-one movement. So that is an easy way to do it. So initial take profit target is going to be 0.9165. And then if we actually measure from the highest high to the lowest low in the symmetrical triangle, then we actually get that 0.2109 added to closing price of the current candle is going to be 0.10419. So 10.5 cents would be the second price target on ADA USDT. Now let's talk about some general rules or some advice for trading symmetrical triangles. Generally, symmetrical triangles break out in the direction of the preceding trend more frequently, more often. So that means if price was in a bullish trend before price formed a symmetrical triangle, you are statistically more likely to break to the upside than to the downside. So something to keep in mind when you're looking at symmetrical triangles in different market conditions. Kind of the most important thing here is when you're taking this trade setup is wait for the breakout. Absolutely always wait for the breakout. Do not try to get in early. I have seen some Twitter threads over the last few days basically advocating that individuals enter into their positions now, right? They're like, listen, volatility is extremely low. And you know what follows low volatility? Yes, high volatility. We're going to see a big breakout movement. And I'm seeing a lot of these traders on Twitter who, if I could even call them that, who are trying to give advice on how individuals should be trading these markets right now. And they're saying the highest opportunity is, the highest profit potential is when you enter before volatility spikes. And while that is absolutely true, you are basically advocating and advising individuals to enter into positions in my opinion, the worst area to be putting on positions in Bitcoin, just because this is the moment of max opportunity. But you're left to a coin toss, because no directional bias is really implied. There's going to be a big move, man. But I hope you get it right. Good luck. And again, you're going to get, maybe you're not going to catch the same breadth of the movement, but you're going to catch a profitable movement anyways. And this is kind of the cool thing about being a trader and trading differently than other individuals is that, you know, it's kind of like, let me tell you guys, if any of you, this isn't really super true in my case, but if any individuals watching right now, you know, have always had that like fantasy that they would, you know, maybe they didn't have such a good time in high school, and they always had that fantasy like one day they'd travel back in time and smash it, or, you know, go to the high school reunion and, you know, just totally crush it, absolutely, and show all those people who thought that, you know, you or anybody else wouldn't be successful, or, you know, anybody that's like laughed at you. If you want to really live the lifestyle, if you really want to have the opportunity to prove to yourself and to anybody that matters to you that they were wrong about you, or, you know, kind of your methodology, it's being able to consistently profit from setups that other individuals who are considered experts in your field, which I kind of scoff at. When I consistently profit from trades that other so-called experts in this field, let's say, talk negatively about. Because obviously trading with indicators in the first place, I'm swimming against the stream, and you know, typically avoiding price action and focusing on objective data and a lot of back testing. We really do get a niche audience here, which is cool because I find that our subscribers, the viewers of this channel, the viewers of the show, are individuals who are really genuinely interested in trading professionally, improving their trading, and who bring a lot of value to the table. So it's pretty neat. All right, so we talked about the measured movement of 0.02109 and the two take profit targets for ADA USDT. The third piece of advice here for trading symmetrical triangles is watch out for this phenomenon known as busted patterns. Bulkowski refers to these as busted patterns. So sometimes price breaks out in the opposite direction from what you intended. So for example, if price here on this swing low would have continued down and closed below the lower band of support for the symmetrical triangle, that you would look at that if you saw that on the daily close and think, oh, it's not going to break up. This thing is breaking down. Well, you shouldn't dismiss the chart entirely. Keep your eye on it for a few more days and see if it just reverses and begins moving its way back up. And if you see that happening, that's what's known as a busted pattern. And trading those setups can be profitable. And the last thing is watch for price to stall out in the direction of the breakout, like once the breakout occurs. So that is what we kind of have to watch right now. As we can see, price did close above the upper boundary of this trend line, and so far is forming a doji. Right now, this is all completely fine. This is a BPC, a break pullback continuation setup. This is where price breaks a level of resistance and then immediately pulls back and tests it as new support. Typically, this is going to be a entry opportunity for a break of resistance type trade. But if I see price stall out here in a serious way, if price can't get, let's say 1 ATR above the breakout level within like a couple days, then I am going to be a little hesitant about that. Like, where's the volume? Where's the actual support? And I would consider exiting the trade and just waiting on the sidelines until I saw the volume come in, or until I saw actual better movements in the direction that I wish to trade. All right, so that's ADA USDT. The last thing I wanted to cover today is going to be Troy, Bitcoin, actually. And we're going to be talking about rectangle bottoms. It's another, whereas, you know, we were kind of talking about a breakout to the upside pattern. Here we're going to be talking about bottoming patterns and still kind of looking for breakout. So Troy Bitcoin is an interesting chart. I've seen volume pick up pretty significantly on this thing over the last couple of weeks. Just kind of monitoring the Binance volume scanners. And so Troy has been something to play intraday. So just kind of charting this and getting a little bit more data on it, we can go back and see that between the middle of March 2020 and the middle and really towards the end of May 2020, price consolidated in what I consider a rectangle bottom pattern. Now, a rectangle bottom pattern is a short-term bullish reversal pattern. A rectangle bottom is obviously going to occur following a pronounced downtrend or a down movement in the market, often preceded by a decrease in volume, or often volume decreases as the rectangle bottom formation forms. Now, when the overall market is, when when we are in an overall bull market, but the asset that is that we're looking to trade has not been moving up in a bull market, has been moving down. These patterns actually break to the upside about 85% of the time. So things to look out for when identifying rectangle bottoms is 1, a preceding downwards movement in price, and then price action compressing and occurring in between two horizontal trend lines, right? We can see one right here, right around 33 sats, and then we see one right here, right around 27 sats. We see that very consistently, price consolidated between these two price levels and moved up and down. And what really characterizes a rectangle bottom is this kind of ping-ponging behavior, this movement up and down between support and resistance on this asset. And at these low price levels, this is often a sign of accumulation. And again, so very similar to watching for the increase in volume on the symmetrical triangle to indicate when price is likely to break out. We can see that here as well. Let's look at volume, and we're going to put the volume moving average on, and we can see. Well, let's do this then. Okay. Yep. So as price kind of moves into the last stages of this rectangle bottom, we can see volume increase pretty decently, and kind of the telltale sign is these bigger volume buy candles come in. Two big ones back to back, then a third one, and then that was your warning. You had 3 of them, and then this big volume spike that came in. All right. So what's interesting about Troy is that once we broke the upper boundary of that rectangle bottom resistance, so this pattern's dead, we seem to be forming another one. And, I kind of would like your guys' opinion on this because I shared this with another trader that I talked to. And, he kind of favors chart patterns a little bit more. And he was saying that he really thought this was a double bottom or even a swing failure pattern. I think that he's actually wrong on both of those. Certainly doesn't seem like a swing failure pattern. And actually, if anything, if we're going to talk about bottoming patterns, a rectangle bottom kind of looks like we're transposing to what might be forming a W bottom, right? W bottoms. So let's see if I can pull those open. Three rising valleys, triple bottoms. Here we go. 3 distinct minor lows at about the same price. 1, 2, 3. 1, 2, 3. Avoid tall and narrow triple bottoms in a bull market, and avoid short and wide triple bottoms in a bear market. They overperform. So we're in a bull market, so we would want to see a short and wide triple bottom from Troy, if this is a triple bottom. It kind of seems like, doesn't really seem tall and narrow. It does kind of seem short and wide. I don't know. This one certainly seems more short and wide to me. But anyways, let's talk about the kind of the rectangle pattern here. We can measure our profit target one of 2 ways. The first way is the same way that we would measure our profit target for the symmetrical triangle, which is we identify the highest high in the rectangle bottom pattern. And that is going to be actually right here. That's going to be 36 sats. And then we identify the lowest low. That is going to be 25 sats. That is a difference of 11 sats. So we simply add 11 sats on to the level of horizontal resistance, 11 sats, to give us a profit target of 44 sats, which if we had entered anywhere down here, we would have struck on this candle right here. We would have hit that take profit target, which would have been a great trade. Yeah, that would have been a 43, 44% trade in one day. And what's interesting is I think we're kind of setting up for a range-bound trading opportunity here on Troy. The other measure, the other metric that you can use to measure your take profit target for a rectangle bottom is actually to you can use any drawing tool you want, but just draw I'm gonna use a trend line. Just draw a line. Get out of here. Just draw a line from the beginning of the pattern to the end, to where it actually breaks out. And then take that, and let me see if it's going to let me invert it. Well, how many bars is that? I wonder if it's going to let me do it. I'm trying to figure out how to do this. Well, kind of like that, but I feel like I screwed it up. Block. I'm going to have to use another drawing tool to do it. Yeah, I'm not sure how to do it actually in TradingView here, but kind of the concept is, and do it on paper if you printed it out, is to take the width or how long the rectangle bottom forms, and then take that and just flip it 90 degrees. So you just measure straight up. And although, while that might seem a little far-fetched, Thomas Bulkowski even said in the Encyclopedia of Chart Patterns that this is a pretty useful method. Okay, so we've got obviously measuring from high to low, and then measuring the width and flipping that on its end. If you can figure out how to do that conveniently better than I can, please let me know. So looking at Troy BTC, I actually took some exposure on this on the pullback earlier, and now it's already up to 39 sats. I actually got some entries at 37, and I had some bids down at 36 as well. My advice for Troy BTC here is this does appear to be a good range trading opportunity. You can look to long near horizontal support. That's going to be close to 33 sats, and look to sell near resistance at 47 sats. Be careful trading the actual kind of breakout of 47 sats where resistance is itself. As you can see from the breakout of this rectangle pattern, you had to be, it was a little bit difficult to catch because you had price come right up to resistance and then boom, just explode on the very next day. And again, you did have a few signs like rising volume for 3 to bars, but you also had that back here. However, maybe knowing that the average rectangle bottom lasts about 45 to 70 days would have given you some pause, because if you're getting that kind of volume spike and you're only 31 bars into it, well, you've got quite a bit of ways to go. And then here where we actually do break out, yeah, we're about 70 bars into the rectangle bottom. So this looks like a range trading opportunity for me. I would be careful trading, I would trade with caution the actual rectangle breakout itself. I would watch for rising volume, which we did see on today's current candle. High volume candles near support can often indicate potential entry zones, which is what we just saw right here. So a retest of support followed by a big buy volume. This overall looks like a pretty good area to enter to me. And that's why I did. Other things that are in play were Kyber Network USDT for me. These are, again, just showing good volume signatures, things that I'm tracking and watching with my systems. So if we go to the daily on KNC USDT, not a whole lot. Actually, just a pretty fresh chart. So we can actually kind of open up KNC USD on Coinbase and get a little bit more historical data. As you can see, we're very loosely maybe retesting the highs that we formed. I don't think this is fair to say. But we formed these highs in March of 2020, and now those have become support. I don't really feel that that is most likely going to be the case. So if anything's going to be support, that feels a little bit more accurate to me. We consolidated there for a while. We have, unfortunately, kind of this rectangle pattern right here, actually. But really, the only reason I'm marking it out is because it just indicates to me a level of the market where the auction theory was strong, where there was a lot of agreement upon price until everybody did not agree on price, and here we get the nice run up. KNC USDT, obviously, we seem to be in a bullish trend. We've sold back, and it's very similar, honestly, to Cardano here. So let's see. I don't really feel that we're forming any kind of pattern here. It does look to be potential rectangular distribution, I would argue, because we're not forming lower highs. We're actually forming equal highs. We're not forming higher or lower lows. We're forming equal lows. So again, we kind of have this rectangle formation up here at the top on KNC, with support around $1.04 and resistance around $1.28. And dropping volume, which is very common, of moving into kind of a rectangle or distributive pattern. We're about 50% of the way through this. Again, if we identify this as a range with the high here and the low here, we're a little bit more than 50% of the way past it, probably almost up to like 70%. So a little late for an entry here. Down on the 4 hour, I had kind of liked this. If we look at this range on the 4 hour time frame here, we can kind of identify this lower area, kind of this secondary layer of support coming in right around $1.14. And I saw price break down below that and break above. What I would really like to see here is KNC kind of sell down to $1.14 and hold, and then go for that retest of $1.28. That's the trade I would like to get on KNC USDT. So if we look at the 5-minute chart here, we can see that one of two things is going to happen here for KNC. Either we are going to, you can see we've been in a bullish trend here and pulling back and selling back up every time. Either right now, at this moment, is a good buying opportunity on KNC, and we're going to be making another high, probably somewhere right around here. Or we are finally going to kind of break this trend here and get what I hope we get, which is a retest of that $1.14. So that's about it. I was going to get into IOST, USDT, but we covered KNC, Cardano, Troy. We covered Bitcoin quite a bit. Checking in with Bitcoin, not too much, still consolidating in that range. All right, guys, let's kind of go through the chat here. Paul Carpenter says that his trading area is in his backyard. He's got a flowing pond he made for 150 bucks and a huge glass table and nice yard to listen to the birds, see the squirrels that he feeds, fully immersed into the market. Yeah, I really enjoy trading outside. Obviously, I like to garden. Got a lot of nature to look at, a lot of land to look at. So I will. That's not really my routine right now. I'm not gonna lie. I used to have a routine. There was a time in my trading career where I did have a routine of trading outside, particularly for the cryptocurrency markets, because the daily candle close is so much later than traditional markets, or for the forex markets and the contracts for difference. That's not my routine now. My routine now is in my office, which is I'm gonna say like natured up, but certainly not directly in nature. But that's beautiful, man. Robert says replay doesn't work with Heikin-Ashi candles and indicators. It doesn't, huh? Interesting. All right, so we'll do Heikin-Ashi here. And we'll do Lazy Bears. Replay. You. Yeah, you're right. MBait says all this technical stuff he throws at us, but he doesn't think we can figure out up is supposed to be green and down is red. Yeah. The tie on backwards. Yeah. DePie guy says, "What's the book called?" I've been referencing Encyclopedia of Chart Patterns by Thomas Bulkowski. It's in the Google Drive for premium members in the premium library. Oh, did I say KFC when I meant to say KNC? Kentucky Fried Chicken tearing up the charts. All right, let's take a look at the broader markets here. Electronium continuing to pump. Let's actually ETN. Let's go take a look at that. KuCoin and hit BTC and KuCoin. All right, so here is Electronium. You know, I really personally don't like this chart because I do have a friend in my personal life who invested quite a bit of money into Electronium. You know, like around here, and yeah, just kind of put me off of it. But let's see what we got here. All right, so overhead resistance at, oh, they had, you know, price is so low they had to invent extra sats. Crazy. What's wrong with these kids nowadays? Yeah, I think that's about fair. 535 does seem to represent kind of the bottom of that overall consolidation area. And we have that spring and a big run up. Okay. Big distribution and wicking. This is kind of pulled back again to the top of the range. So this could be positive. Again, a lot of consolidation. Basically, consolidation and accumulation since May of 2019. You know, just slinking ever farther down. And then big pump, man. Big ETN pump. Good movement to the upside. Pretty violent sell-off and a climb back up. Very much looks like Bitcoin. And then a more pronounced sell-off to a more reasonable level of support. So certainly the bullish scenario here would be that, let's see here, 535 sats hold. Let me make sure I'm... Wow, price so low, they invented 2 extra decimal places. All right, so 53 sats. We're just going to say 53.52, even though that hurts my brain. But it's actually 53 sats. Price is currently trading at about 69. Now, again, we have falling volume, so I'm not really excited to be looking for kind of a swing trade here. I think that those who kind of bought this area were certainly lucky. I don't really like, again, falling volume. Falling volume is almost always bearish. As you can see, we had the big pump and the big dump, and then the more pronounced dump. This is kind of the late stage, buy the dip, we're going to get rich. No, the people who bought the dip over here got rich. So I'm not really liking this for a trade. Let's look at my signal system and see what's going on. Yeah, the Donchian system isn't calling for a trade either. TSI is curling back up, but has not crossed above the signal line. Time transformation actually gave an objective trading signal on the 21st of June. Yeah, so here's that nice bottom signal. And then a little, you know, we can see here price form a lower low and time transformation form a higher low. Nice regular bullish divergence there and nice pop back up to the baseline. Today's close is going to put us above the baseline, and dynamic money flow is not agreeing with this trade. DMF got into, was into Electronium, was liking Electronium back here. And then as soon as we slipped below the baseline, basically, beginning of June. So this kind of seems like a correction in a bearish market. But overall, I think there's also more predominant elements of consolidation here. This seems what I think is likely to occur here with Electroneum is probably to form a range unless the volume comes in. So I would like to see a range form between, let's say, 69 and 53 sats. And let's see what kind of price action we can get out of here. But yeah, I would certainly expect to see price sell back down to 53. I don't really see any volume or really any other reason why it would actually break out here. It is kind of retesting support as fresh resistance. So we would kind of be looking for a rejection there. But people like it. It's been relatively popular lately. People are pumping it, so keep our eyes on it. Elrond. Are there any opportunities in Elrond today? Well, no, not really. Time transformation told us to get out of the market over here and then gave us a continuation signal on the 27th, which would have been right here. So we would already be in this trade, up about 16% on Mr. Elrond. I'm really not liking this for continuation of any kind. Yeah, TSI crossed under over here, which is kind of a warning sign. So actually, unfortunately, I would not even properly be in that trade because my confirmer isn't agreeing. My confirmer isn't confirming the trade. Dynamic money flow looks good. Time transformation is crossed up. You know, TSI might cross back up. We might get continuation. But after a kind of a run like this, Elrond seems to be wanting to move into consolidation to me more. Again, no objective trading signal. And with that kind of time transformation exit signal, and we can see, although the volume is decent, lower volume. So let's see if we push past here, which I think is less likely. I think we actually are probably going to get some red candles coming in over the next few days to see this come back down to the range and see the volume kind of fall off more. And then this will end up looking like kind of Cardano or Troy or Kyber Network. All right, KNC. Are we going to break down or pop back up? What do you guys think? Yeah, and then there was the Cryptopia hack for Electroneum. Let's take a... Let's have a moment of silence for all our fallen brethren. And it was a breakdown. All right. You know, this is a pretty interesting story about Chinese gold fraud, but I feel like this is going to be best covered tomorrow when I get the camera working. So I think we'll do that. No, we want... There we go. Look at the euro dollar. Yeah, so kind of big picture on the euro dollar. Got a hot spot right here. Yeah, we got a hot spot right here. We've dealt with this before. March of 2015, November 2015, January of 2017, and now here again in March of 2020. Overhead resistance. There we go. 1.15, 1.1. And that's kind of where we're consolidating right now, forming a bit of a... no, it kind of looked like a flag zoomed out on the weekly, but... yeah, big range in the currency pairs. All right, let's go down to the daily. See what we got. So, hold on. Seeing as on the weekly, we certainly are up quite a bit and closer to resistance. I feel like the... unless we're going to see a breakout of this range, most likely we are going to get a little bit of upside, followed by more pronounced downtrend. So I would certainly be leaning bearish on the euro dollar, just looking at the weekly. Looking at the daily, yeah, I don't really have a lot of cause to be bullish. You can see price is creating lower highs and lower lows. Oh, there's the first low, and there's the low there. Hold up. Yeah, I don't really like this, but no, I don't like this at all. Because if I'm, objective about how I measure it, which is going to be the candle close to this candle close, and I extend that out, we actually have a broadening descending wedge. Oh, there we go. Broadening wedges descending. Price follows two downsloping trend lines that broaden out. Breakout is upward. The short-term bullish reversal pattern meets its price target about 79% of the time, but has throwbacks 53% of the time. For those of you who don't know, throwback is where you actually do break out of a chart pattern. So let's say we're like, oh, this is going to break out. This is a bullish pattern. Price does break out. And we're like, oh, it's time to go long. And it goes another candle. And then boom, back down into the range. That's called a throwback. That puts a lot of traders off. Generally, for savvier traders, that's where you want to add to your position and capitalize on that throwback. The stats on this are pretty clear. But most people just exit their position and get their stop loss hit. So, yeah, so I feel a lower low. Let's do a ghost feed here, actually. Yeah, so my question is how do you get it to stop doing this? You just have to have a ghost feed forever? Or is it oh, there we go, you got to connect it with something. That was traumatizing. Yeah, I don't really like this broadening wedge idea. I almost wish I wouldn't have drawn it. It just happens to be what it is, so we'll just remove that until we have a little bit more objective data. Yeah, not really liking the euro dollar here for anything. Let's look at what my strategy would do. My strategy would not have me in any position. TSI is crossed to the downside. We got exit signals from time transformation last week, actually a double with bearish divergence. Dynamic money flow is bearish. My confirmer is bearish. And actually, I'm getting a sell side signal today. And all I need is for price to close below 1.1216 to actually get that short signal on the euro dollar. So yeah, I don't really like this at all. And we can see those lower highs and that falling volume. Yeah. One last thing that I want to look at before I go, and this is going to be Euro Swissy, happy about that movement right there. Less so the Euro CAD, but that's okay because we were already in a no loss on that. So overall, just kind of a backwards day. Soybeans entered the short, hit my first take profit target, price reversed. We've hit our break-even stop loss as of today. PPLT, unfortunately, didn't have the benefit of having that first take profit locked in. So this is, as we are crossing above the baseline, this looks to be an early exit and a losing trade. Canadian Swissy is doing fine. Euro Swissy back down into the profit. The Euro Canadian is not taking the movement that I want here, but that's okay because we did have that profitable wick to the upside yesterday. Dollar Canadian slinking down, and I do have long exposure on the Dollar Canadian, so this might be the only Forex trade that is closed out today. And the Pound Kiwi looks just fine. We've been short on the Pound Kiwi for quite a while. So let's look at our precious metals, though, because, yeah, as I talked about in the premium newsletter market analysis that I put out last night, I did think that gold was still in play. I actually had not looked at gold yet today. But we are getting some decent continuation. And this brings up an interesting indicator concept to talk about when we talk about overbought and oversold thresholds. So as we can see here, this is ZAO USD, contract for difference. Now, this initiator generates a trading signal on the 19th of June, right here. Okay, 19th of June, right here. And if you were trading a system that required price to be within the qualifying zone, then you would have completely missed out on this trade opportunity. Unless you were doing one method that I've seen a few individuals do, which is they actually set limit orders. It's very similar to the reversal baseline bounce concept. They set limit orders right at the qualifying line and kind of like in that threshold, like in that zone between the baseline and the qualifier. They'll set limit orders there to take advantage of wicks. But kind of the question here is, if you were to get a continuation signal and your initiator was in overbought or oversold territory, would you take it? You know, my strategy and my thought has always been no, because the likelihood that price would reverse at that point is very high. However, I have individuals that I've mentored in the group who swear by, like they say they like it when they get a continuation signal and their initiator is overbought, like it's accelerant. Just remember, guys, it is the fumes that are flammable, not the liquid itself. Anyways, palladium potentially flipping trend to the upside here as we kind of progress. Very choppy palladium has been, but if TSI is able to cross over, we might see some potential upside. And you know, if I just kind of look at the palladium chart, this does seem to make sense. We had obviously this March meltdown with palladium, which as palladium is an interesting metal when compared to the other precious metals. It just kind of does its own thing, and it's been in this just massive bull run for such a long time that this is probably the biggest sell-off on palladium I've seen in a very long time. And if you look at how palladium has responded to, just look at this area, just look at how palladium price has evolved. This is the March meltdown, and then just like everything, it recovered, but then it sold off pretty drastically and continues to sell off. So I feel like palladium is a far riskier long trade. Nah. Something like that. I don't really like that. I don't really like that breakout either, but yeah, falling volume, a lot of distribution kind of going on here. Not really comfortable trading palladium. And let's just look at what my strategy would have me do on palladium. We're just looking at this. Yeah, everything but TSI is there. And looking at silver, I hope you guys have been stacking silver. It's been one of the funner things for me to do over the last about 3 months is kind of, you know, rekindling the joy that actually kind of collecting and looking at and storing physical silver coins and bars and the like can have. It's really neat. It's good. Obviously, being a trader and investor, It's easy for the whole process of the value of individual items, particularly when you're trading precious metals, to just kind of pass over your head, or in one ear and out the other. But when you actually have the physical coins to look at, and you complete a roll, or you get all the bars from particular mints, or all the coins from a particular year, just a cool feeling. Yeah. And I would argue that if you're trading cryptocurrency, then you need to insert something like collecting coins into your life. Collecting coins used to be pretty popular. Now collecting coins is not popular. More people collect Pokemon cards, I think, than cards. So bring it back, guys. Bring it back. Platinum. So most of the precious metals actually putting in pretty positive moves, along with, listen, I want to point this out too, ETF indices. It's all right. Let's go look at the Dow. Okay, so far day. Nothing really to write home to mom about. Let's look at the NASDAQ. The NASDAQ is moving up on strength. However, no confirmed trade in this area. And obviously the SPY, which kind of really everybody is looking at. We're at an interesting place here with the SPY where we can continue upwards here. Let's just take a look at, let's just kind of look at this dispassionately. Man. Of all the charts that I chart, of all the markets that I look at, there is not one that just instills a sense of volatility and empire movements and liquidity than the SPY. This thing is a beast. Okay. Enough of that, Justin. Let's go. So overall, like big picture time frame here. So for the last 5 weeks, the SPY really hasn't done anything. It put in a week of gains here, immediately sold back off, consolidated, which is pretty much what it's done. So this almost kind of starts to look something like a weekly pennant, right? I mean, very roughly. Like I understand, guys. I'm not proud of it either. We don't have to talk about it. So I don't really see anything coming out of the SPY that's highly indicative. Falling volume, so I just feel like we're going to continue to consolidate. The nice thing about indices is that you have, these things aren't going to stay still. Indices can't really stay still. There's global trade that needs to be facilitated, and all of the money that's in 401ks and hedge funds and mutual funds, and all of that money, their clients don't want them not actively trading. So they're always actively trading the indices. People love trading indices. So these things are always going to move. Let's look at, on the daily time frame, what would I be doing? Nothing right now, because time transformation is crossed bullish, dynamic money flow is bullish, and price is attempting to close above the baseline. What I really need to see here is true strength index cross back up to the upside as my confirmer. Overall, things have been pretty steady in this area. Good continuation long. I remember catching that on the SPY. And then, of course, the early exit signals. We were in these trades. We actually exited here and then missed out on the gap up and 3 days of some more upside. But that was the end. That was the end of the uptrend. And this has just been sideways ever since then. Yeah. So nothing would make me happier if the SPY formed a big rectangular range here, very similar to Bitcoin, with resistance at 321 and support at 302.23. So just based on that, I would probably buy and look for 317 and then look to sell. Oh, by the way, so I'm going to start wrapping up, guys, but he probably is not watching. But if Andrew Munns is watching or does watch this show later on, thank you. Andrew, you've been watching the show for a long time, and, you generally post comments that make me laugh and bring a smile to my face. And a few days ago, maybe it was a few weeks ago, it had to be a few weeks ago, you posted a comment on one of our videos that read, actually, let me go find it, because I'd like to read it. All right, here it is. So on 2 weeks ago, Pentagon war game scenario. Nope, that's not right. There we go. So Andrew Munns says in our comment section, in other news, Whammo Slip and Slide Wave Rider Double with 2 slide boogie boards is on sale, $39.99. It's built for adults too. Invite the neighbors and their kids over for a smash hit barbecue and be the dual inspirational cool pops this summer that everyone always wishes they could have and adults always wishing they could be. And I am not a liar. I'm a man of my word. It was $10 in shipping on Amazon, and I bought it, though. And I cannot tell you, Mr. Munns, how good it feels to be that dual, inspirational, cool pops that everyone always wishes they had and always wishes they could be. So thanks for the suggestion, and I hope you guys are enjoying your summers. All right, with that being said, we're going to go ahead and wrap up today's show. Thank you guys so much for joining me. Sorry for a little bit of a different format today. Hopefully we'll get the camera issues worked out tomorrow and everything is working a little bit better. If you guys enjoyed the content, make sure to subscribe to this channel on YouTube particularly. Hit the thumbs up button on your way out. You guys don't know how much that actually does help us out, boost us in the rankings, and get this word out there, get this message out there at a time when it needs to be heard more than anything, because there's a lot of negative stuff going on in the world today, guys. If you guys are ready to take your trading to the next level, you guys would like to sign up and join our team, our community of professional traders, make the switch, head over to premium.crackingcryptocurrency.com. Let me see if this is all ready to go, actually. Yeah, so cool. Yeah, so as you guys can see, at the very beginning of the show, I talked quite a lot about our new packages. These are now live on the website. As you guys can see, our basic package is now $99 a month. Our plus package is $149 a month. And our professional is $249. Discounts for paying annually, and you can also pay monthly. So we have gotten rid of the semi-annual and quarterly payment systems. It's just monthly with recurring payments or non-recurring payments, and annually with a discount. So hopefully making that simpler for you guys and allowing us to offer more at actually a lower cost and making the whole process easier. And of course, we do now have Coinbase Commerce. Sorry, I have to log in with Discord. Coinbase Commerce now, so we can accept multiple cryptocurrencies, and that's all handled by Coinbase for crypto people who choose to pay in cryptocurrency. And we do have a new payment provider. We are utilizing Authorize.net. So if you guys click on here, Authorize.net, we are now an Authorize.net verified merchant. So this was cool, and it's been a saga. So thank you guys so much. Premium.crackingcryptocurrency.com if you want to join our community and begin building your objective trading system. Thank you guys so much for all the support and love. We will be back tomorrow at 12 p.m. Central Standard Time for another episode of Breaking Bitcoin Market Update. Until then, treat everybody with respect, trade safely, and I'll see you guys tomorrow, guys. Cheers.